Okay, we are live. Yes, yes, yes. Hello, hello. Looks like someone's on time. Good evening, and hello to anyone who's watching the replay of this. We are in the final week of basics of investing in the stock market. And I meant to say hello, everyone, but and hi, T. Walker. Yes, so we are in the final week. We are in week 3 of 3 for investing for independence, basics of investing in the stock market. So happy to have you join tonight. And we are just going to jump in tonight. I'm still going to try to keep it to an hour. We have some gems that are going to be dropped, not just from myself, but some videos I'm going to pull up. And so let's just go ahead and get into the presentation. And if you're joining and I don't respond and I don't see you, it's because I'm looking at the presentation, but I will try to remember to come back and say hello periodically. You know what I can do? We'll see what the presentation up. I can't. So anyway, let's just go ahead and get started. This is actually week 3 of 3. It said week 1 of 3. It's week 3 of 3. And I will recap what we've learned so far, but I just want to finalize and finish up the stock brokerage or the brokerage discussion. And we ended last week kind of talking about the best in class brokers and kind of who to stay away from. So I just want to finish that. We talked about, let me go back. We talked about the best in class being Fidelity, E-Trade, Charles Schwab, TD Ameritrade, Interactive Brokers, and Merrill Edge. And I really just wanted to go into the questions you need to ask yourself before selecting. Now, they're all best in class, but as you can see from this comparison chart, some provide services that others don't. So let's just look for the red X's, and I'll just pick one. And let's just go to paper trading. So if you want to paper trade, which is using a simulator account to really learn that, it may be in the pipeline for the future, but as of this article, it wasn't available. You would have to go to either TD Ameritrade, Interactive Brokers, or E-Trade to do the paper trading. And these are the questions, like I said, you want to ask yourself. All of them provide great education with stocks. I think TD Ameritrade is pretty solid. Oh, they have live classes, they have recorded classes, they have a YouTube channel. I always like brokerage accounts that do have a YouTube channel to offer free information. That means they stand by what they say. It's on a public forum. And I really do like TD Ameritrade. You also want to know if there's fees, right? So which brokerage account charges fees and for what? So again, this is a great chart. Last week, I showed you the website to go to where you can kind of find this information. And that was week 2 of 3. So go ahead and check that out. And let's just pick one area where fees are charged. So if you want to transfer out your full account to another broker, TD Ameritrade is going to hit you with $75. The good news is a lot of brokers that you transfer into will cover that. So let's just say you wanted to transfer out of TD Ameritrade for whatever reason, and you wanted to go to E-Trade, Interactive Brokers, Merrill Edge, Fidelity. Negotiate with them, let them know that you're looking to move your money. That's what it's about, moving your money from one broker to their broker, and they're charging a fee, and you would like for the brokerage house to cover it. Majority of the times, if it's a decent, now they're not going to do it for a $20 account, right? So let's be realistic. If it's, a decent size brokerage account, and I can't give you a number because I'm not sure what the threshold for each one is, but they're willing to cover the transfer fees in most cases. And then let's just see If you wanted to do paper statements, E-Trade is going to charge you $2. Merrill Edge is going to charge you $5. I know TD Ameritrade used to charge $2, so it's relatively new that they stopped. But again, just pay attention to things that matter, and fees are one of them. Also, research. You want to be able to, you know, see which brokerage accounts or brokerage houses offer great research. And you can find that. You can, pause this and look at this chart again and just look for the X's, see where the X's are, see if that matters to you. If it does, move on to where there's a green check versus a red X. And the same with banking fees. Like I said last week, there's a misnomer that if you move your money to a brokerage account, you can't get checks, you can't take your money out, you can't, have a savings account, you can't have a debit or credit card, and that's just not true. A lot of these discount brokers act just like a bank, a standalone commercial bank. So again, look for where the X's are. If you need a mortgage loan, you're not going to TD Ameritrade, you're not going to Fidelity, but E-Trade is going to offer you a mortgage if you are a customer. So again, just things to be on the lookout for. We talked about research. There's more research opportunities. And as you can see, this is full of green checks. So you don't have to worry about these like pink sheets and mutual funds and stuff like that. But if you look at the investment options, there's certain things that they're kind of, if you want to do crypto trading, none of the brokerage houses offer that. So you see red X's across the board. But paper trading, futures trading, you can do that at TD Ameritrade. You can do that at Interactive Brokers. You can do that at E-Trade. You cannot do that at Fidelity and Merrill Edge. So if you're a futures trader, I'm not sure why you're taking basics of investing, but who knows? But these are just things that you want to know and be aware of. Refer to last week's video for more information. Mobile platforms are big, right? Everyone has access to mobile. And if you want to access your account through your mobile device, then you want to make sure that they offer that in the area that you need it. So again, if they do iPhone, Android, almost every, best-in-class broker is fully equipped to offer mobile research access at the same level as a desktop or web browser. And it lists the mobile features, but I don't want to take up too much time on that. We talked about best in class. Do your homework. The purpose of me referring back to it is because everyone has different needs, and based on your needs, you should pick the broker that applies to those needs. So let me see if there's any questions. Okay, so no questions. Great. We're going to go back to sharing. I think I still am sharing the screen. Yes, and let me just go back to presentation mode and then, okay, so let's just do a quick recap of everything that we discussed. Why is this not going to present? Okay. Weeks 1 and 2. And I'm going to talk kind of fast so I could get through this. It's already 7:12. My gosh, time is flying. So we talked about the woke investor mindset, and that's what is the basis of everything in this community. We know that wealth is obtained through knowledge and education. Then once you receive that education, you have to execute. So it's a double E, but it's still the woke investor mindset. We learned that the dire wealth gap and asset allocation that we as Black and brown people are facing needs to be reversed. We need to do a better job at investing versus buying and being consumers. We saw videos and heard from Kobe Bryant, who also understood the impact that investing, not basketball, would have on multiple generations. Steve Harvey and Ice Cube shared their thoughts about wealth as it relates to how it affects us as a community, as well as how we should move as a community to build wealth. The constant headlines that show we are in a downward trajectory, and the urgency is now, not tomorrow, not next week, it's now. So even if this information does not apply to you, please share it with someone. Start having the discussions with people, even if they don't want to have them back with you, but start planting the seeds. It may take 5 years, 10 years for those, seeds to manifest, but start having the conversations. We also talked about the myths that are associated with investing. You don't have to have A1 credit. You don't have to be a rocket scientist. Like it's not a complicated endeavor. As long as you do things like you're doing right now, listening to videos like this, learn the basics and begin, just execute. You don't have to be rich. We also learned the history and the importance of the stock market, including the various exchanges and the indexes. So again, if you missed last week, you can see part 2 where we talked about everything from the NASDAQ to the New York Stock Exchange, S&P 500, Dow Jones, the Russell 2000. And so go back and check that out. We learned how a company goes public. And the example was my girl Jill with her lemonade stand and, wanting to expand and grow her business. She had to go to the public because the bank denied her loan request and application. And so that's how her company became public. The link is in the description below for the Netflix short documentary on the stock market and learning about the stock market. So we also learned the benefits of investing, including the magic of compound interest. And that's how you can grow your $500 in 10 years, or how your $500 investment in a company like Tesla or Chipotle would have been worth over 40,000, or excuse me, one was 40,000. I think the other was like 23,000. Anyway, that's the magic of compound interest. Without putting another penny, nickel, dime, quarter into that $500 investment in 2012, you would have exponentially grown by 700, 800, 1,000% your investment. And that doesn't happen with many types of, it definitely doesn't happen with a savings or checking account. And so, yeah, we talked about how much you would have made with small investments. I also did some live demonstrations. So again, check out my channel. I think the links may be in the description. If I didn't put them there already, they will be. And the best-in-class brokerage firms, the various types of accounts available, and the process to open those accounts. We talked about discount versus full service. Nowadays, unless you are super wealthy, full service brokers are really just not for you. They do provide a great service if you're the type of person that just does not have time. You're flying from London to New York to Tokyo on a regular basis and you don't have time to, do the work, then yes, go ahead and look into full service brokers, but it's not necessary for most investors. And we learned we talked about 42 work terms that every investor should know at the beginner level. So yeah, if there's any questions and that you have about anything from session 1 or 2, please do me a favor and add that to the comment section, and I will be sure to get back to you ASAP, as soon as possible. It is my goal to, even if I don't know the answer, I will do my best to try to find it for you. And I hope everyone who did, attend the previous sessions did start kind of thinking about what type of stocks they would want to own. This group of guys this duo of guys that I follow for simple reasons. I mean, it's interesting because, I've been an investor for a very long time and I've never seen anyone that looks like Troy and Rashad building the community to talk about investing. Usually, it's suited down, very affluent or at least corporate type of guys who try to educate our community. But I appreciate Todd and Troy. Excuse me, Troy and Rashad so much. So I want you to listen to some clips. There's a couple of them that I will be sharing throughout this video, where they just break it down in an easily digestible format, which I'm all about. It has to be, A, B, C, D, E, F, G for us to really understand how simple this type of movement can be. And before I play this video, there's a disclaimer at the top. This is really for educational purposes only and is protected under Section 107 of the Copyright Act of 1976, allowances are made for fair use for the purpose of criticism, comments, news reporting, teaching, scholarships, et cetera, et cetera. So let's just get into it.
But it's like, it's so crazy because it's like, if you put $6,000 into a Roth IRA for your child at 14 years old, right? And let's say it grows 12%. By the time they're 60 at retirement, there'll be $1.1 million in it. So you could literally make your child a millionaire with $6,000. And now people is literally trading their whole life to get a pension to retire. You could set your child up for $6,000 when they're 14, have 1.1 million. Like, don't even worry about your retirement. It's right there. Focus on what you want to do in life. How many of us gave up our whole dreams, our whole life to have a pension, to have some security, and we still don't have security? So for me, that's the greatest myth.
I think mine's the same along those lines. It was like every especially from a West Indian standpoint. My parents are Jamaican. It was like save your money, save your money, save your money, save your money, until you grow and realize the people that you're telling us to save the money with aren't doing that at all.
They're investing your money.
They're investing your money, right? So if you ever try to go to the bank and say, "Hey, I need 20,000," they're gonna tell you, "Hey, we need you got to give us a 2-day warning. We need to know that you're coming to get that type of capital." And it was like, wait, if I have 20,000 in my account, why can't I get it out? It's because they're using the money to invest, right? They're making interest on it, and you're making nothing on it. And so when you start thinking about that, it's like that can't be the route. So it's along those same lines. Invest your money. And Fernando said that to us too. He's probably the first person I had heard say it. I treat every dollar like a worker. If I had to work for you, now you have to go work for me. And so he's like, look.
Listen, so many gems dropped in that little 2-minute clip, right? And what I kind of was saying in the past 2 sessions. One, if you have to go out and work for your money, then make sure your money's working for you, and have it sitting in your home or under a mattress or even in a standard savings account. It's not working for you. Actually, if it's not gaining interest, it's actually losing money because of inflation. So they also talked about how the banks take your money, the money that you put in your savings account, in your checking account, in your Christmas club account, and they're investing that to generate interest and make money, which is why if you do go to the store, if you do go to the bank and request a large withdrawal, you cannot get it right away. You have to wait. You have to give them advance notice, not so they can go down to the basement like we saw in movies and take the money out of the vault. No, they have to move money from one investment to another because the money that we invest with them, they're making it work for them. So again, and also, the power of compound interest, let's make our kids rich. Let's, set our kids, our family members, if we think it's too late for us, which I'm going to get into an article in a second. It's not, but let's set our kids up, and it doesn't take much, right? And there's ways to kind of protect your investments. Maybe some people are thinking that, stocks, I don't know which stocks to pick or this and that. And we're going to hear more from the guys in a second about ETFs, but ETFs, and we talked about it last week too, ETFs tend to be a more safer bet. They are actively managed by one of the big, whoever owns that ETF, so whatever financial institution owns that ETF, it's actively managed. So if one stock is underperforming for an extended amount of time, that stock will be replaced. But there's multiple stocks in that one ETF, and it follows certain industries. And we'll talk more about that. So this is the article I was talking about, and I just want to read it really quickly. It's a quote from a woman named Gabriela Berospi, and she's the founder of the Latino Wall Street movement, which provides financial education to the Latino community. So if you know somebody that's in language Latino who needs to hear this information too, this is a great resource. So just Google Gabriela Berospi and a whole lot of information about her will pop up. But let me quickly read what she says. Some of the most successful professionals, entrepreneurs, and influencers go years and years and years without realizing the power and potential of stock market investing. When it comes to the stock market, there is a misconception that if you aren't provided with special insider education, you will never be able to master it. For that reason, too many people are missing out on the opportunities stock market investing provides. But as I can attest, and that's her speaking, the stock market is for everyone. Let me repeat that again. The stock market is for everyone. It doesn't matter if you're a student, a young professional, or a retired person. You only need one thing to get started investing and earning money in the stock market: the ability to decide once and for all that you are going to make it work. Powerful, powerful. And I couldn't have said it better myself. But that's the woke investor mindset. Let's execute. Let's execute. And then after we realize that we are going to make it work and we're ready to go to the next stage, we have to understand that we have to plan. We can't get around the planning. We can't just go willy-nilly. And planning comes in different stages, which we'll talk about. I'll go over what an investment plan looks like. I will go over one that I have completed, and it'll show you more. But it takes me back to Jill and her expansion, right? She literally was selling lemonade until she decided she needed to expand. And then she started the planning process. And then she made it happen. So not sure if you've heard this before, but something I heard for years growing up: but prior proper planning prevents piss poor performance. So without planning, what's the line? And we'll get into that too. What you don't plan, what is it? If you fail to plan, you plan to fail. That's what I wanted to say. And so let's get into what an investment plan would look like. This is my woke investment plan. We have these for the members of our community to fill out on their own. We talk about it. We keep each other honest, hold each other accountable. We have two separate communities. One is a general community, just where we post information and everything from articles to video clips that we think may inspire one another or be informative. And then we have the accountability group. So, and we dive much deeper. We really start getting into, okay, I'm looking at this stock and I realize, this is happening. And we get deeper into the actual movement and action of stocks, and if it's good investments and things like, if they're good investments and things like that. So with the investment plan, we know that we buy low and we sell high, right? We're not buying the stock when it's all the way at its all-time high. We have to wait for it to come down some. We know that if you fail to plan, you plan to fail. We know that our mindset matters. We have to decide once and for all that we belong here and that we're going to do this thing. And some of us need accountability. Like in certain things, I wake up every morning at 6, between now at 6:30. There's a woman named Stephanie Perry. She started a Stephanie Perry media page, and she holds an accountability session, not every morning, but let's say 3 to 4 mornings each week. And I get up and I get my to-do list done with a group of other women. Some of us just need accountability, right? If you don't know, don't buy. Research matters when it comes to investing. And what I mean by that, like you may not need to know all the details, but do not listen to people that you see floating around the internet or Twitter or TikTok telling you what to buy. If you hear something that piques your interest, then quick research will let you know if this is a pump and dump, and pump and dump is more advanced, and we talk about that more in our accountability group, or if it's a solid company. So research matters. Always double check and always use a calculator. When you're figuring out numbers and it's your money, just please don't try to, guesstimate. Calculators are your best friend. When in doubt, ask an expert. If you're really interested in something or confused about something and you have a brokerage account, try to drill down to somebody where you can get expert advice. It's better to be sure than to guess, right? So a lot of people, I don't advise this. I don't advise anything, but I personally stay away from penny stocks and SPACs. And again, SPACs are specialty acquisition companies, which don't go through the same vetting process as regular companies to become a stock. I stay away from those simply because it's too risky. And so if I have questions, if there is a penny stock, right, and I'm hearing rumblings and bubblings or whatever, I'm going to find an expert to really find out, is this real? Like, what's going on? Use a credible broker. We talked about that. Best in class brokers only. Do not try to, there's other brokers out there, but stick with the ones that are backed by banks. One, you're protected more so than the other ones. Two, you don't have to worry about them going under, like some, offspring broker accounts that you may not have ever heard of, right? Or may just be cheaper to use, or maybe the trend of the day, so hot stocks eventually cool off. It doesn't matter if it's Tesla, Amazon, Microsoft, Apple, all stocks are going to rise and fall, but it's just how the market works, and you cannot be scared off by that. And we're going to hear from Warren Buffett in a second, who talks about that. The stock streets are stoic, meaning you have to be too. People get too emotional when it comes to investments, right? Long-term investors should not be paying attention to the stock every day if you've done your homework, done the research. And I always like to emphasize to write your why before you decide to buy. And that all of this is included in the investment plan journal, the Woke Investment Plan Journal, that will be accessible to anyone who joins the community. But yeah, write your why before you buy. And so this is just a blank example, right? I just wanted to blow it up and make it look clear. So the questions that you want to ask yourself is what am I investing for? And that would be the goal. And you can always have more than one goal. It's not, exclusive to just having one goal. You have to make a commitment to how much you plan to invest. We're going to talk about, well, let me just move on. How involved will I be in managing my assets? And be truthful. Like if you don't want to be active, and we talked about this last week as well, be passive, meaning you have a certain amount of money coming out a certain amount of time. So rather it's monthly, quarterly, biannually, you're just going to have that go into an account and invest in these ETFs versus, stocks, or maybe some stocks like an Apple, or a stock that you really, really have a passion to invest in. You also have to be honest with how much are you willing to risk, because the beauty about the stock market is that you can make a lot of money, but that money that you make will offset some of the losses. So not every stock is going to be a successful stock, but with the right portfolio and the right research, you won't even notice the ones that aren't that successful. And then you also need to know, how quickly do I plan on using the funds? Like, how I'm only speaking long-term, but is your long-term 10 years? Is your long-term 20 years before you need the funds? Just be honest with yourself. And here's an example of my investment plan, my woke investment plan that I update. I update it annually. And I won't even say update, I review it annually to see where I am. And if I need to change. Now I'll look at it, throughout the year and be like, oh, how much percent, making sure I'm still on track. But the edits will not happen before 12 months. So the next time I'll look at this to see if there's any edits I need to do, because things happen in life, right? You may be at one level economically, with an income, and something can happen to change that. It may grow, it may decrease. And so you have to be realistic with your investment plan. And that's what the community does too. We keep each other honest to make sure that we're being on point with our planning. And so what am I investing for? I'm investing for the long term. I want more control over how I spend my time. I don't want to, work until I'm 75. I want to be free to travel and do whatever it is that I, want to do. And so investing in the stock market is my goal to get me there. I also want to generate an endowment fund within the next 4 years. And so that is, I started this particular plan in the beginning of 2021. So I'm still working on the endowment plan and which schools will be part of that. But I have 2 more years to go. Yeah. Well, I have more than 2. 2 more years to go. 2+. And so how much am I committing to investing per whatever? So this is my pledge. I am committing to investing 40% of my monthly income at minimum, no matter what, and 100% of all my supplemental profits. Meaning, if the supplemental profits, if I don't know, if I sell a car, but the car needed, if I sell a car for $10,000, the car needed $3,000 worth of work before I sold it, then I'm not putting 10,000 towards my investments. It will be the 10,000 minus the 3,000. So the profits, whatever I take in less whatever expenses. Also, how involved will I be in managing my assets? I personally am committed to being an active investor, which includes spending at least 4 hours every week, using the woke strategy, meaning I'm doing my research, I'm educating myself at least 4 hours. And that could be every morning, watching Bloomberg or reading. Now with YouTube, there's so many great live stock analysis channels. Like, what are you going to spend your time and how much of that time are you going to spend educating yourself? How much risk am I comfortable with? I am comfortable assuming some risks. However, I plan to include less risky investments as well as create a well-balanced portfolio. And that just means for me, as I get older, my risk tolerance gets lower, basically. And so I evaluate that every year to see where I am on that spectrum. And so that's something, again, we talk about in the community. How quickly do I plan on using the funds? My long-term investments will remain untouched for the next 5 years. At that time, I will reevaluate. So that just means for 5 years since I wrote this investment. Now, it may start out for you at 10, it may start out at 20, but then when you update, okay, as you cut into those years, you want to see where you are. Like, do you plan to, stay in the country? Do you plan to move? Whatever. You just want to have a timeline set out. And so, this is great. An investor without an investment objective is like a traveler without a destination. Like, you really have to see it so you can achieve it. It comes down to that. Like, you really just have to have a vision and a goal and work towards it. And the why before you buy. This is a quick example of why I invest in Apple. It pays dividends, which is part of my strategy. It's a large mega cap company, which we'll talk about in a second. It's less risky. Where's Apple going in the next 5 to 10 years? Nowhere. Apple is a leader in the technology industry. I'm bullish on the technology space. I think it's an area that's going to continue to grow, and I expect stocks to increase. They also have started their own chip. They're creating their own semiconductor chip. They make a lot of revenue from their iOS platform. They also have a credit card division. So they're doing an Apple car. And so that just shows you that this company is thinking long term, and which means I expect it to be around long term. So let me see if there's anybody that commented or hello, everyone. Yeah, so if there's any questions, if you came in late, go ahead. You put them in the chat. If I don't answer them during this live session, I will be sure to answer them eventually. And if I don't know the answer, I will get it for you. So let's go back to the presentation. We're doing really, really good on time. And I always like to repeat that. Please, if you know someone, hi, Evelyn. You know what? Let me just say hi to everyone. Thanks for stopping by, Evelyn. I appreciate you. Hi, Evie. Appreciate you. Appreciate you. Appreciate you. Hey, that's Evie again. And I did say hi earlier to, is this Clodo? Okay, Clodo. Cute name. I like that. And who else? T Walker. Yes, I did say hi to T Walker. Evie, so our Facebook communities are only exclusive for our members who are actively or really serious about trading. And there's links on how you can join. So you can join different ways. You can join, you know what, I'm going to get into that in a second. So I don't want to get ahead of myself, but okay, let's get back to the presentation. Okay. Okay, come on, computer. What happened? Give me 1 second. Okay. Oh, you know what? I'm sorry. My battery's about to die. Let me. Hold on 1 second. Sorry, y'all. I hate when this happens. And I think some more questions came up. Hold on. And I'm coming back. Okay. Hey, everyone. Okay, so I'm back. Sorry about that. I had to put my charger in the computer. Also, Monica, welcome. Monica is one of our OGs, I like to say. I started this mission, this movement in February of 2021. And I'm not sure, Monica, I don't know if you joined then, but if it wasn't the first cohort, it was the second. And so I appreciate you coming through and staying serious about this thing. I appreciate you. Okay, so let's go ahead and go back to the presentation. Okay. All right. So yes, so we talked about the woke strategy, the woke investor mindset, which simply means wealth is obtained through knowledge and education. But I'm asking you, we're going to continue with more education now. I'm going to show you how to do some research on these stocks. But if you're really, really serious and you may need some extra accountability and you want to join a community of like-minded people who are trying to, get this investing thing together, then phase 2 is the execution. You could join the woke Facebook community through becoming one of my clients. If you're one of my clients and you sign up for a one-on-one coaching session, then you can be added to the Facebook group, the standard Facebook group. Like I said, we have a separate accountability one, which is a little more advanced, but for the standard Facebook group, a one-on-one coaching session, which is on sale now. It's on sale for $79 through January. It's going up to $90. The original price was $99. So I have to figure out what my 2023 price is. But for now, it's $79. You could join the accountability group. The link is also in the description before. And that's, again, it's a smaller, more intimate group. And it's exclusively for people who are serious. Like, it's a one-time payment you pay that's good for 12 months. And we have bi-weekly, starting January 14th, I want to say, we come back after the holidays, bi-weekly meetups on Zoom. I might do a private group on YouTube for those who prefer that method. But anyway, saying all that to say, you can join the smaller accountability group, or, I talked about the accountability call, and that's through you get to the woke, the woke Facebook page. So yes, so we talked about planning. We talked about the 7 P's of planning. We talked about if you don't plan, you plan to fail. And the first step in that planning, I kind of wet your whistle a little bit on the first phase. So the first class where I said, start thinking about stocks you would want to own. Start thinking about them. I didn't ask you to do any work, but just start thinking about companies, and usually how people get to this, it's the products that they use, which I also mentioned. So if you love Nike sneakers, if you're buying Nikes for your kids all the time, is Nike a company that you think is going to be around for a long time and you would like to get some of your money back that you're spending with them? For me, I love Starbucks stock. Now, I don't drink as much coffee as I used to, but I saw a vision with Starbucks when I started investing with them. And I still see, coffee's not going anywhere. If you look at the people that are still investing in coffee, you have people like Jadakiss the rapper and his dad, because coffee's not going anywhere anytime soon, right? And Starbucks, when you do your research, again, if you come into our accountability group, you'll learn more about this, but Starbucks is way more than just coffee. So what companies do you want to invest in? As you now are moving into the next phase, write these companies down. What you are doing is the starting point of a watch list. So what is a watch list? It's a customizable list of stocks that you want to keep an eye on. And you kind of want them to be diverse. And we'll talk more about that in a second. They are an essential part of planning your investments. They let you quickly see whether specific parameters have been hit, and consequently, whether it's a good time to buy or sell your assets. Watch lists must be part of any woke investor's plan. So let me just say this. You can keep a watch list in your brokerage, your best-in-class brokerage account, and look at it, and research on your brokerage account. Or you can keep a handwritten one in your investment planning guide and use our tools that I'm going to share in a second on how to research to see where they are. Is it time to buy or sell? Is there any news that's going to affect the stock? And again, you don't have to do this on a daily basis. We're talking at most biannually, especially if you're looking at best-in-class companies, which everything I'm talking about is best-in-class. So best-in-class brokerages, best-in-class companies. Like I said, we're not talking about penny stocks or SPACs that don't have to do the same vetting, we're looking at best-in-class companies. That's why I refer to Nike. That's why I refer to Amazon. That's why I refer to Apple and companies like that. So diversification, which we talked about earlier, excuse me, right here. You want to keep your eye on a list of diverse companies. You don't want to only have companies that fall, like you don't want to just have Ford. Tesla's a little different. You don't just want to have all automotive companies. You don't just want to have all consumer discretionary companies. You want to have a mix. And I like to give the simple example of like when you're having dinner, even if you're a vegan, right? You don't just want a bowl of tomatoes or a bowl of string beans. And even if you got a like peach or a cherry, yeah, okay, that's better, but it's still not, the best. This right here is a well-balanced, diversified meal. You're getting the nutrients that you need. Now, if you don't eat fish, then you'll find something else, right? But for the sake of this example, you have your fish, you have your fatty, healthy fatty food with the avocado, you have some greens, and you have your tomatoes. And so a healthy, well-balanced, diversified meal is way better than a bowl of string beans. And when we talk about stocks, it's important because it spreads your investments around. When one investment goes down, another might go up, balancing things out. It's the same with your lifestyle. Like you're not just going to own a car. You're not just going to own clothes. You're not just going to own a computer. Diversification is what makes the world go round. And when we're talking about creating your watch list, I like to keep it simple for beginners, right? No more than 20 companies. I say 10 to 20. 10 to 20 is the sweet spot. And what you want to do is, without doing any research, write down the full name of those companies, 10 to 20 companies that you would like to invest in. If you didn't know, even if you didn't know what it costs, even if you didn't know how much the stock was, right? Write down those companies, then write down the ticker symbol. So we learned what a ticker symbol is, and you could just Google that. What is the ticker symbol for Apple? And thanks to Google, you will not have to do anything else. It will provide you AAPL. So that's what I want you to do. And then write down the current price of the stock and the date on this document. So if you join, like I said, the group, you'll get an investment plan where these documents will be provided for you. If you don't, then create your own. But just the homework assignment is to write down the companies you would want to invest in, regardless of cost. Now, some you may find out they may not trade, right? They may not be publicly traded, but keep the ones that are publicly traded. You're going to find their tickers. You're going to find the price of the stock, and you're going to write down today's date. That becomes a goal for you, right? That becomes a visual goal. And some of the prices are going to vary. So one stock may be $100, another stock may be $50, another stock may be $1,000. Who knows? But you have a goal and you will invest based on your finances into those companies at different times. There's also another page. We're not going to talk about this. This is one of the pages for one of the more advanced ways to research, but we're going to go over market cap and outstanding shares quickly. But once you have your 10 to 20 companies, you're going to drill it down even more to see what their historical performance was, to see over the past 5 years, what was their stock starting price and their stock ending price, their rate of return. When the past 20 years, what was the stock's starting price and the stock ending price? We're also going to diversify in terms of sectors. So looking at the 11 sectors, there's different ways that you can diversify there. So you have everything from materials to industrials to financials to energy to consumer discretionary to information technology, communication services, real estate, healthcare, consumer staples, and utilities. Diversification in a stock portfolio. Well, excuse me, a diversified stock portfolio will hold stocks across all sectors. Now, you don't have to have it all 11, but you do want to have a blend. So you may want to own consumer communication services like T-Mobile or something like that, but also have consumer discretionary and information technology. And those would be like the Walmarts, and information technology would be tech, right? So you want to definitely look into a diversified portfolio. The other thing you want to look at is market capitalization, which also is related to shares outstanding. I'm going to break this down so it's easy to understand really quickly in a second. But market capitalization is simply how much a company is worth, determined by the stock market. It is defined as the total market value of all the outstanding shares, which is listed above. And to calculate a company's market cap, you simply multiply the number of outstanding shares by the current market value of one share. I'm going to break this down. Break it down. Shares outstanding is simply the number of shares that are currently held by all of its shareholders, including the share blocks held by institutional investors and restricted shares that the company keeps for, like, the Serena Williams and the Beyoncés of the world, right? And their officers. But a diversified portfolio includes different types of market cap. A large cap is the biggest of them all. Well, actually, mega cap is another term, but the most commonly used terms are large cap, mid cap, and small cap. There's also a term called mega cap, which is the largest of them all, and micro cap is the smallest of them all. A large cap simply means the company is worth 10 billion or more based on their stock valuation. A mid cap is 2 billion to 10 billion, and that's B billion, not million. Small cap companies are between 300 million and 2 billion. So let me repeat that. Large cap, 10 billion or more. Mid cap, 2 billion to 10 billion. Small cap, 300 million to 2 billion. Then you have the mega caps, which are over 200 billion, which would be an Apple. And then you have micro cap, which is lower than the 300 million threshold, but higher than 50 billion. And why does market cap matter? So when you're evaluating a publicly traded company and deciding whether you want to purchase shares of its stocks, don't focus just on the price of an individual share. You need to look at its market cap to get more clear picture of how the market values the company. You want a company that is valuable. You need a company that is looked at valuable. And it's not just the share of the price, the price share, which we'll see in a second. Given its simplicity and effectiveness for risk management, market cap can be a helpful metric in determining which stocks you are interested in and how to diversify your portfolio with companies of different sizes. Let's make it make sense. Let's break it down, easily digestible. Here are two examples of companies with very different stock prices, but they have similar market caps. So stock A, $50 per share. For one share, you would have to pay $50. But there are 50 million outstanding shares. That means that's all the stocks that anyone could buy, own. There's only 50 million shares. So you take the market cap. To get to the market cap, you take the stock price, you times it by the outstanding shares, and then you get the market cap valuation. So stock A is worth $2.5 billion. But stock B, the price of that company is only $10 a share. So automatically we would think, company B must be worth less than company A from a market cap perspective. Nope. Because company B has 300 million shares outstanding that they can sell, that they, their officers own or whatever, they are actually worth more. They have 300 million shares times the $10 per shares, which gives you $3 billion market cap. So this is important. Both are valuable companies, but you can invest, you instead of getting, if you got $50, you will only be able to get 1 share of company A versus 5 shares of company B. So just a reminder that I want you to share this with whoever you come across that could benefit from it. Again, not everyone is going to watch the whole thing at one time. Just send them the link and tell them a part to watch, but it's all about planting the seed, and is what's going to change the trajectory of where we are. And so, this is a quote by John, and I still have some more. So we're going to do an example. We're going to go over a couple minutes today, but and I'm going to check to see if there's any questions in a second. But when you see something that is not right, not fair, not just, you have to speak up. You have to say something. You have to do something. And that's my mission as part of this movement, for us to invest for independence using the woke strategy and getting more of us less afraid of letting our money sit and work for us. Just think about this example. This is just, I live in New York. This is not even, this is not even accurate for people who live in New York. Most women, I should say. So if you think about what your ancillary expenses are, not fixed, right? Not your rent, your mortgage, your water bill, your light bill, not that. Expenses that, we can live with or not. You think about getting your hair done every month, that's $250. You think about any social activities, whether it's brunches, lunches, parties, dinners, whatever, social concerts. Let's just round that up, $500 a month. Again, I live in New York, so these are small numbers. So I'm trying to be conservative. Clothes and accessories. I don't know, rather it's hair accessories, rather it's shoes, whatever. Let's say $300 a month. That's a total of, there's something missing. I'm sorry, y'all. There was something missing. There's something missing for $400, I think. Yeah, there was something missing, and I can't think of it right now. But anyway, let's just say you're averaging $1,200 a month. You know what? I'm going to use what's here. We're going to use this as $11.50. $11.50 per month. Oh, I think the other one was just like miscellaneous. So let's go with 12. I'm sorry. Let's go 1,200 a month. It was like miscellaneous calculations. So there's things that, we spend money on frivolously, right? If we're in the supermarket, we see stuff that we just put in the cart. We don't really need it, especially if we go to Target. That was it. I was like, okay, you end up in Target and you end up spending way more than you needed to, or Trader Joe's or whatever. So yeah, so the total spending per month is $1,200 of things that we really, really don't need, but we buy. So that's $12,000 in 10 years. What if you would have invested that in the stock market? Now, what I'm going to do is show you, because I've already done it, and I'm going to pull it up. Did it not? Okay. Yeah, here we go. Okay. So let me see if you can see it. Yes, you can. Okay, so back to the back testing screen. I just want you to see what that $1,200, if you would have invested that same amount 10 years ago, in 2012, contributing $100 a month, $100 a month, right? And that to me is doable for most working people, Now, if you are struggling, if you can't do it, listen, I get it. And this is not for you. This is just to show you, even if you start your children, right? Even if you start your children at this level, the types of returns you can get. So I did 3 portfolios. The first portfolio is just investing in Apple, T-Mobile, Starbucks, McDonald's, and Amazon. The second portfolio is investing in Amazon, Microsoft, Google, and Meta. Heavy tech. The first one is more diversified. So it's showing you diversified versus concentrated. And then I did one 100% invested in Apple, just to show you what Apple has done for people. This is not what I recommend. I don't recommend anything, like I said, but here's the results. In portfolio one, let's just get to the numbers. Portfolio one, that $12,000 would have turned into $42,635. Portfolio two, because it was tech and tech was super growth. Now, if I would have did that for another category, these numbers wouldn't be as high. But if you would have 10 years ago just invested in the top tech companies, $41,573, $12,000 would have turned into. Portfolio three, with the Apple alone, $12,000 would be worth $65,000. And this just is a map showing you the growth for each portfolio, 1, 2, 3, and the years that it grew. And you can see there's been some dips. This year was a dip, but still the rate of return is something you won't get. Yes, look at 2022. We have negative numbers for most portfolios. But because the long term is the best term, it makes up for all the losses. You would still be so far ahead, and your money would have worked very hard for you had you invested and stayed put for 10 years. So let's get back to the last few slides, and then I'll see if there's anyone still here. And if there's any questions, I think. The other thing I want to say, tomorrow I'm going to do a live. So tune into my YouTube page, and I'm just going to go through other examples. I'm going to go through some more examples of what a portfolio would have looked like. If you have any ones that you want to include, let me know, and I will include them. And I'm going to try to do this regularly so people, because I think that really gets people. Well, I know over the past 2 years, this has been the most popular part of the education, and I still get lots of questions about it. So stay tuned. If you're not subscribed to my channel, please subscribe and turn on the notification bell. It's Black Culture Talks, where we talk all things wellness, wellness, travel, and finance. So subscribe, please. So wealthy people, we talked about this week one. Wealthy people know to invest first and spend what's left. Broke people spend first and invest what's left. So if you do have any discretionary income that you can cut in half and invest half of that at least, if not all of it, but half of that to begin, and don't look at the market every day. It's going to go up, it's going to go down. But this is long-term investing strategy where you want to build and accumulate wealth and have your money work for you. So recognizing the relationship between company size, return potential, and risk is essential when selecting investments for your portfolio. If you, again, want to get on this woke investment plan journey, as well as join the community, check out the description. The information will be listed. Here are the toolkit. Here's the beginner toolkit that we'll go over if you join. We'll definitely I might do one live example tomorrow when I do the other live. It'll be tomorrow morning too, let me say that. I'm thinking about 9 a.m., but I will post it tonight. So this is the blueprint for you to start doing your homework. You want to look at CNBC, and I need to put a / Bloomberg because I also really like Bloomberg, but Bloomberg, unfortunately, you have to pay for to really do their research, but I really like Bloomberg. But CNBC / Bloomberg. Google Finance is another great tool to use for doing research as it relates to where this company was, its market cap, its valuation, all of that. Yahoo Finance, bar chart. The company's website is where most of the information resides. And Investopedia for words that you do not understand, for basic information, through advanced information. Investopedia.com is gold. And not tonight, because again, I want to try to keep it as close to an hour, but I think tomorrow at 9 o'clock, go through the toolkit so you can see exactly what it is. But I do want you to hear this from Mr. Warren Buffett himself. So take a listen.
It normally would take an hour at least to
And again,
build
this is
good
for
meal. It takes
informational
about 20
purposes
minutes.
only.
Way of doing it. What are they missing?
Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because your stock goes down, you shouldn't own a stock at all. No, I mean,
What are dumb things? Selling a stock?
yeah, selling a stock as it goes down. I mean, if you buy your house at $20,000 and somebody comes along next day and says, "I'll pay you 15," you don't sell it because the quote's 15. You look at the house or whatever it may be. But some people are not actually emotionally or psychologically fit to own stocks. But I think more of them would be if you get educated on what you're really buying, which is part of a business. And the longer you hold stocks, the less risky they become. Whereas the longer the maturity of a bond, the more risky it becomes.
Listen, we talked about Mr. Buffett in our week one, and he is truly, truly, truly. Oh, I'm sorry. Zoom in. I'm sorry. Oh, I don't know. Evie, tell me. I'm going to go through this in a second. I'm going to go through the questions in a second. But Mr. Buffett, mastermind, brilliant investor, the most prolific investor of our time. And so that's why I like to share his thoughts on investing. It really takes education, right? It really, the more educated you are, and there's a saying, the more you learn, the more you'll earn. And that's really what it comes down to. A lot of us get emotional about investing, and we see the stock go up or we see a stock go down and we want to jump out, and that's not how the market works. Things will happen. And there was a crash in 2008. Was a pandemic in, 2020. So with that being said, we just have to understand that, and you'll understand that through education and learning. We also have a woke merchandise shop. So the link, oh my gosh, I don't know if I put the link in. I'm going to put the link in, but get your woke. Wealth is obtained through knowledge and education. Great conversation starters, great gifts to give to the kids. And I definitely reinvest all of this to make sure the tech is working, to make sure that everything I need to give back is, covered. But I'm going to cover it regardless. But if you want to get, support and get yourself a woke shirt, the sweatshirts are dope. They're thick. I love them. I'm a sweatshirt snob. I really like thick quality shirts, and these are that. So again, just a reminder, you could join phase 2 through an accountability call with me, or joining the accountability group. The links with a one-time payment for 12 months. And you get, I forgot to mention, you'll get 2 accountability calls with me that you could plan whenever. Starting in January, it will only be 1. The prices, again, will go up for the one-on-one coaching. And then I also like to use, this quote from Morris Chestnut, just because empowered people empower people. And so again, this isn't for you. If you want to, bring it to a community. I also do speakings, at different organizations. So let me know, and I'm there. And it's the independence for me, y'all. And I just like the freedom of having your money work for you and not thinking about it, and just stay woke. Stay woke. Thank you, guys. I appreciate you guys. Let me come to the questions. Join the woke community. Schedule a call with me. The links are below. Tell a friend, and then tell a friend to tell a friend. And one of the things we're going to talk about. Oh, okay. Let me hold on. I see. Hold on. Let me just answer. So what you can do, I think there's a way, if you're not on the email list, I can Google Doc. Hold on. I can Google Doc. So let me see. Let me just go through. Let me go through them in order. So hello. Welcome back. Yes. Oh, okay. So Evie, wait a minute. Do I know you, Evie? Oh my gosh. Hi, Miss Dickens. M. Dickens. Sorry. Hi, M. Dickens. Evie. Who's this Evie? I said, are you one of the OGs too? Ticker symbol. Sorry. And again, we talked about that in the first part one of Basics of Investing. So we talked about the terms that you need to know and what they mean. So ticker symbol. And yes, somebody answered it. Perfect. Thank you. Oh, so there's an Evie and a Eveline. Oh my gosh, this is a tongue twister. I'm sorry. Transportation in New York. That too. I think the thing that was missing was definitely because I truly thought, I was like, you know how we always go into stores with a budget and we always come in. I know with me, and I keep looking down here, sorry. I know with me, like Trader Joe's is I'm like, okay, I just need to get this and that. You know, it's only supposed to spend $25 and $125 later. So that's what I mean, like miscellaneous expenses, which are not necessary. So again, that, and the reason why I'm emphasizing now too, because so many high value companies are at a discounted price. Now, that's not to say they're not going to drop a little more. It's just to say that right now would not be a bad time to start thinking about, you know, even if you're doing fractional shares, to start thinking about them. And we'll do, you know, in the more advanced groups, we'll do more research. I will come on the YouTube channel periodically with some more basic information. And somebody was like, so I guess maybe the presentation wasn't. So again, just go ahead and sign up on the, what is it called? The email list. Subscribe to the email list, and I will send out the new presentation. For my OGs, they know I send out links to the presentation. So yeah, just join the email list. And during my graph, it was hard to see the numbers and the symbols. Okay, so again, just go ahead, like I said, and join the email list, and we'll be good. You're welcome. You're welcome. You're welcome. You're welcome. You're welcome. You're welcome. Will you talk about the ETFs tomorrow? Well, let me know what you want to know. What I can do, I don't know, Monica, are you still here? Are you still here, Monica? Just let me know, you know, what you want to know about the ETFs. I can definitely, this again is the basics, and it's sharing how to start fishing and what you need to fish. But again, if there's something specific, and there's also, I think Monica may have left, but there's something else I will share. You know what? Let me just put a note to myself. ETF and toolkit. Okay. Okay. So yeah, so I will. And if you could stay for a second, I do want to pull up a video that may help you tonight. I am new to the community and interested in joining. Welcome. Great presentation. Thank you so much. Listen, I shared in another week. I literally don't even buy the kids in my life gifts anymore. Like, it'd be something like maybe a sweater or something like that. But the closest ones to me all get shares of stock. They'll thank me later, trust and believe. And I've been doing this with my older niece and nephew for a minute. But the younger ones, it's absolutely the only way to go now. And especially, you know, solid companies that they really like Disney and Nike and companies like that, you know, are not going anywhere. Yes, I'm from New York City. Yes, we know. Listen, I was being real conservative with those numbers, because when I went to get a manicure, which is why my nails aren't done right now, my gel manicure that went up about 75%. So we're looking just for a basic gel manicure, I'm paying $60. So that is just, But my niece was a manicurist, but away in college. She's home now, so I'm going to have her do my nails this week coming up. Yes, Monica, will you be discussing? Yes, this week. I will discuss it. I'm going to play a video in a second. So I'm just going to go through, make sure I didn't miss any questions. And then I'm going to go play this video, which will give you, it's a short video, and it's the guys from EYL. But then I'll talk about it some more. And then once this video is done, if it didn't cover exactly, if it didn't cover exactly what you need to answer, just in the comment section, just let me know specifically what you need, and I'll get to it. Okay, hey Monica, glad you're still here, and I'm gonna play this in 2 seconds. Trading as you speak, very green, but you say start somewhere. Trading as you speak, trading as you speak, trading as you speak. Oh, planning for tomorrow's purchase. Okay, all right, yes. Well, again, it's not a marathon. Like the marketing is not going anywhere, and that was part of the video two videos that I wanted to share, but sake of time, you know what? I'm going to share. I'm going to do the ETF first, since Monica asked, and then there was another one, but I said, you know what? Because of time, I didn't really want to go too much over. Because people, you know, I just don't like doing that. So let me go back to this video, and then I will play the ETF. I hope the ETF one will play first. Okay. Okay. Let me see if this is it. I'm not going to share the screen until I make sure this is it. Hold on 1 second, y'all.
I'm going to start investing because I don't want to see none of them hurt your shot.
Well, so to end
Okay,
point,
all right, perfect. This is it. Okay, hold on. Okay, so let me share the screen, y'all. Present, share screen, Windows, here we go, share screen. And thanks for having Grace, because I'm new to this StreamYard. I'm a Zoom girl, but so I could see your comments, I needed to do StreamYard. And if it continues to work, I'm going to do the paid version, because then I could record it and save the, anyway. Okay, so present. Okay, let's go ahead and play. I might have, oops. Here we go.
I'm going to start investing because I don't want to see none of them hurt your shot.
well, so to Envy's point, what is the smartest investment for a beginner? Is it real estate? Is it stocks?
I mean,
Like, what is it?
Envy might be different, but for me, stock.
Mm-hmm.
You know what I'm saying? That's always been my love. That's been my passion. I feel like you can invest in.
I'm sorry, y'all. Oh my gosh, did it stop? Yes, it did. Wait a second. Let me do this again. This thing is so sensitive. I'm sorry. Okay. Let's try this one more time.
I'm going to start investing because I don't want to see none of them hurt your shot.
Well, so to Envy's point, what is the smartest investment for a beginner? Is it real estate? Is it stocks?
I mean,
like, what is it?
Envy might be different, but for me, stock.
Mm-hmm.
You know what I'm saying? That's always been my love. That's been my passion. I feel like you can invest in stock for $500, $300. Like, that's the easiest way to go about it. And it's like a lot of times people was like, it's like double dutch, which stock to buy. But you can, it's a thing called ETFs, exchange traded funds, which is kind of like a basket of stocks. So like in one ETF, QQQ, right? They have Apple, Microsoft, Amazon, Tesla, Facebook, Google, Nvidia, PayPal, Adobe, all in one. I think it's like $320, something like that right now for one share of QQQ. So you can literally just invest in that, and you got all of those companies. And the great thing with the stock market is that you actually are investing in actual real companies. Like, I love crypto, but let's be honest. If cryptocurrency disappeared today, life would not change at all. If the stock market disappeared, we're in trouble.
Big trouble.
But that's every company.
Mm-hmm.
That's all of these, Apple, Microsoft, Google, Amazon. Like, if all of those companies went away overnight, we'd be on some I Am Legend type vibe. So for me, I think stocks is the easiest way to go about it.
Yeah, I mean, like you said, the ETF route is super powerful because we like to frame things in terms of sports. And so if you ever think of the All-Star team, we like to break it down like that. You got LeBron James, that's comparable to Apple, and you got the Western Conference All-Stars, right? LeBron's on this team, right? So Apple's inside of QQQ. If LeBron has a bad night, this singular stock, like that Apple, that's going to go down, right? But if LeBron has a bad night, you still got AD on the team, right? You still had Steph Curry on the team. They can carry us. And so when he's saying the ETF, it leaves the amount of risk that you would have if you had a single stock. Most people try to figure out what should I invest in. These things look around you. You have an iPhone? Yeah. You use Microsoft? Yeah.
Don't complicate it.
Don't complicate it. You pay Verizon every month? It's there, right? All you got. Do you shop on Amazon? Have you been buying from Wayfair and going to Home Depot during the pandemic? Those are all companies that you can own. So I had this conversation with somebody from Foot Locker. I was like, how many pair of sneakers you got? Like 10,000. How much money do you think that is? How much Nike stock do you have? None. Wait, you could have actually had Nike buy your sneakers for you, right? If you were invested in that stock when it was 90.
Okay, so hopefully, let me get back to, you can't see the video just here. You couldn't see the video? Because it was on my screen. Did you, let me know if you saw the video, yes or no. Okay, I'm going to play it one more time. I don't know what happened. Oh, okay. I'm sorry. Let me play it one more time. It wasn't that long, so let me just try it one more time. I don't know what happened. Let's... Oh. Okay. Let's just... Here we go. Let me check my phone while I'm playing it. Hopefully it doesn't work now.
I start investing because I don't want to see none of them hurt the shot.
Well, so to Envy's point, what is the smartest investment for a beginner? Is it real estate? Is it stocks?
I mean,
like what is it?
Envy might be different, but for me, stock.
Mm-hmm.
You know what I'm saying? That's always been my love. That's my passion. I feel like you can invest in stocks for $500, $300. Like,
So to
that's the easiest way to go about it. And it's like a lot of some people was like, it's like double dutch, which stock to buy. But you can, it's a thing called ETFs, exchange traded funds, which is kind of like a basket of stocks. So like in one ETF, QQQ, right? They have Apple, Microsoft, Amazon, Tesla, Facebook, Google, Nvidia, PayPal, Adobe, all in one. I think it's like $320, something like that right now for one share of QQQ. So you can literally just invest in that and you got all of those companies. And the great thing with the stock market is that you actually are investing in actual real companies. Like I love crypto, but let's be honest, if cryptocurrency disappeared today, life would not change at all. If the stock market disappeared, we're in trouble.
Big trouble.
But that's every company.
Mm-hmm.
That's all of these Apple, Microsoft, Google, Amazon. Like if all of those companies went away overnight, we'd be on some I Am Legend type vibe. So for me, I think stocks is the easiest way to go about it.
Yeah, I mean, like you said, the ETF route is super powerful because we like to frame things in terms of sports. And so if you ever think of the All-Star team, we like to break it down like that. You got LeBron James, that's comparable to Apple, and you got the Western Conference.
So yeah, I don't know what's going on with the video, but you heard the first time. So I'm going to stop sharing it again. The links, if you want a copy of this, Monica, I have it's, you don't have to redo it because I think I still have your, you're still on the mailing list. So I can make sure you get a copy of this. But for some reason it kept blacking out. Hopefully you can hear, can you even see me? Oh, Lord Jesus. I don't know if you can see me. Yeah, okay. I see me on the screen. Okay. So yeah, so he spoke all about, you know, ETFs and gave the best, one of the better examples when he used the basketball team on how even if your star player gets hurt, gets kicked out the game, you still have other star players that can lift up the ETF in that same niche. But we'll talk more about that tomorrow as well. There was something else I thought about saying when he was talking, but yeah, another reason I don't really mess with, or I don't really talk about crypto or push crypto or include that. I talked about it very briefly in week 1, but it's still so new. And if you're a super young, like if you're, a teenager, whatever, and you or you have a teenager and you want to put a couple dollars away in Bitcoin or Ethereum or one of the better, not one of the newer random cryptocurrencies, then I'm not adverse to that. But for people who are looking to retire in 10, 20, even years, or maybe 15, minimize. I'm not giving advice. I just don't promote it. So let me just say that. So let's see who else. It's okay. You heard what they were saying. Perfect. Okay. Didn't see the video. And you know what? I'll include the link to that as well in the description, so you can watch it at your leisure, because I dig what they're doing. So yeah, so this is absolutely, audio was good. Perfect. Okay, great. Well, I thank you guys again. If you have any questions about, thank you to my OGs that showed up. Thank you. I appreciate that. And it's like I said, it's a constant learning process. I'm still learning. I'm still researching, I should say, especially as it relates to the future. All of this stuff about artificial intelligence and the metaverse and this and that. Even though, I bought Amazon in 98, whatever it was, there was no talk of no metaverse, right? So now I have to research and see what my core companies are doing to, advance and stay in competition, with what's going on in the world. So with that being said, guys, I thank you. I'm going to say 9:00 tomorrow morning. Let's just go ahead and say 9:00 in the morning. The only reason I'm a little hesitant, because I have some construction happening outside. If it's too loud, I'll still come in. We'll know, but I'm going to come in and do some examples tomorrow, and the replay will be available. So if you can't make it at 9, don't worry. It'll be on my channel. Come back. But again, turn on the notifications, subscribe. Thank you, T. Walker. Thank you, Evie. Thank you. I hope I'm saying Evelyn right. But if it's not, Evelyn, Monica, so good seeing you again. M. Dickens. Thank you, everyone. And so I will be doing this regularly too. I'll be, doing the free courses on YouTube, as Monica know. We started out, my first class maybe had like 60 something people, all on Zoom. And it was a connection. It was, friends of friends, people I knew in my social. I started getting a lot of requests and demands. And in order to keep up with the demands and meet my goals of reaching as many people versus, what Zoom will allow you to reach, I brought it over here to YouTube. And so again, this information is free for everyone. Share it. And let's stay connected. If you can, join the community. If you need more help, listen, I do, I'm a consultant, so I consult with people. And this is one of the avenues that I consult in. And so feel free to schedule an appointment, and I will see you guys tomorrow, maybe. But if not, I'll see you soon. And join the email list. Thank you, guys. Have a good night. Okay. Bye.